Visa is one of the most valuable financial companies on earth, yet it does not lend money. It does not issue your card. It does not decide your credit limit. It does not carry your credit risk. So how does a company like that make billions? That is the part most people miss. Because when we think about card payments, we usually picture one company doing everything. We tap a card, money moves, and Visa gets credit for the whole thing. But Visa is not the bank. Visa is the network. And that difference is everything. Think about a simple coffee purchase. It feels instant. You tap, the terminal beeps, and you walk away. But behind that tiny moment is a fast, invisible chain of events that crosses between banks, merchants, and a global payment system built for pure volume. Here's what actually happens. You are the cardholder. The cafe is the merchant. The cafe's payment terminal sends the purchase information to the merchant's bank, called the acquiring bank. That bank sends the authorization request through Visa's network to your bank, the issuing bank. Your bank checks the account, checks for fraud, checks whether you have enough credit or funds, and then approves or declines the transaction. If it's approved, that is only the beginning. First comes authorization. Then comes clearing and settlement. That means the transaction details are finalized, the money is routed between banks, and the merchant eventually gets paid. Not instantly, not as a single magical transfer, but through a structured back-end process that keeps the whole system moving. And Visa sits in the middle of that flow, not as a lender, not as the source of cash, as the highway. This is why Visa describes itself in a way that surprises a lot of people. It is not a financial institution in the traditional sense. It does not issue cards. It does not extend credit. It does not bear the credit risk. What it does provide is authorization, clearing, and settlement services for payments that run on its network. That sounds boring until you realize what it really means. Visa is a toll road for money. And on a toll road, you do not need to own the car. You just need to control the route. Now here is where the misunderstanding gets even bigger. Many people assume Visa makes most of its money the way a bank does, by lending money and collecting interest. But that is not Visa's business model. If you pay your credit card off every month, your bank might miss out on interest income. Visa does not care. Visa still gets paid because Visa earns from movement, not from revolving debt. That is the elegance of the model. Tiny fees, massive scale. Every swipe, tap, and online checkout creates a small amount of revenue across Visa's network. On a single transaction, that fee is tiny. On hundreds of billions of transactions, it becomes enormous. In fiscal 2025, Visa reported $40 billion in net revenue and more than $20 billion in net income, powered by 257.5 billion transactions on its network. That scale is the real engine. Visa's business is not built on one big loan. It is built on millions of merchants, billions of cards, and an endless stream of everyday purchases moving through the same rails again and again. And the rails are everywhere. Visa works with nearly 14,500 financial institutions. It had 4.6 billion Visa payment credentials in circulation. Those credentials could be used at more than 150 million merchant locations around the world. Think about that for a second. Visa's product is not plastic. It is compatibility. If a card works in New York, Tokyo, Sao Paulo, and Paris, that is not an accident. That is a network designed to make a payment feel local anywhere on the planet. And the network itself has to move at staggering speed. Visa's systems have been engineered to process up to 83,000 transaction messages every second worldwide. That is not just payments. That is global financial infrastructure operating like air traffic control for money. But where does the money actually come from? This is another place where people get confused. When a merchant accepts a card, they do not simply pay one flat Visa fee. They pay a blended set of costs, often called the merchant discount rate. That usually includes interchange, network fees, and payment processing fees. Here is the important part. Interchange is largely paid to the issuing bank, not Visa. That is how banks are encouraged to issue cards, cover fraud, and offer rewards. Visa's own system depends on that balance. The bank gets the customer relationship and the credit exposure. Visa gets paid for operating the network. So while the merchant may pay around 1 to 3% on a card transaction, Visa is only capturing a portion of that flow. Still, when trillions of dollars move through the system, even tiny slices become huge. And that is why Visa is so profitable. It does not need to take loan losses. It does not need to manage a giant portfolio of borrowers. It does not need to hope people pay interest for years. It just needs the world to keep paying by card. That is also why digital wallets matter. Apple Pay and Google Pay may look like they are replacing the card network, but they are usually just sitting on top of it. They change the front end. They do not remove the rails underneath. When you add a card to a digital wallet, the wallet has to work with the issuing bank, and often the payment network to verify, tokenize, and secure the account. When you tap at checkout, a token and transaction message still travel through the merchant's bank, through the network, and back to the issuer for approval. The interface changes, the infrastructure stays. That is why wallets are so powerful, and why they still depend on Visa's ecosystem. They make payments feel invisible, but the machinery beneath them is still very real. And that machinery is under pressure. Because when a company sits between nearly every major card transaction, governments and regulators notice. Fees, routing rules, and interchange policies are constantly debated around the world. The economics of payments are not just profitable, they are political. Which makes Visa's position even more interesting. It occupies one of the most essential layers in modern commerce, yet most consumers never think about it. They do not see the network when they buy groceries, order a ride, or subscribe to a streaming service. They only see the card brand. But behind that brand is a system built to do one thing exceptionally well: move information fast enough for money to follow. That is the hidden genius of Visa. Not lending, not borrowing, not interest. Flow. Every time you tap your card, you're not just paying for a coffee or a shirt. You are triggering a bank-to-bank message exchange across one of the largest private payment networks in the world. And once you understand that, you stop seeing a card swipe as a simple purchase. You start seeing it as invisible infrastructure in motion. Next time you tap, picture the hidden bank-to-bank exchange.